Apple gets a big tax bill, new aircraft get ready to take off, and Vanguard showing no signs of complacency. This time on the Morningstar Weekly Wrap. Apple got handed a €13 billion tax bill this week after the European Commission ruled that Ireland had given the iPhone maker an illegal tax benefit. This news, however, doesn't change our Apple analyst Brian Colello's conviction that the firm is still fundamentally being undervalued by the market. First off, it could be years for the appeals process to play out, and even if they do have to pay, with over $215 billion in international cash on hand, Apple can comfortably pay this without denting its cash cushion. Brian thinks it's one of the best investment ideas in the tech sector. We're on the cusp of a big increase in single-aisle aircraft production. The market's been worried about a downturn in this market, but Barb Novarini and Chris Higgins think demand will remain solid and that there are some firms trading at very attractive prices.
We think that French company Safran is an interesting pure play on the strong narrow-body aircraft upcycle. Its strong historical partnership with GE, along with a balanced order book for its new LEAP engine, makes it one of our top picks. Currently, it is an option on the Airbus A320neo platform, as well as it has exclusive positions on the Boeing 737 MAX and the COMAC C919. United Technologies' Pratt & Whitney segment is back in the market in a big way with its new narrow-body engine, the geared turbofan. The engine promises greater reliability, greater efficiency, and better noise control than existing engines. It is also currently an option on the A320neo platform, and it has swept the regional jet market, appearing on Embraer, Bombardier, Mitsubishi, and Irkut platforms.
We also dug into aircraft manufacturers Boeing and Airbus Group. Between the two, we like Airbus Group. Its narrow-body aircraft, the A320neo, has an edge over Boeing's narrow-body B737 MAX, with 1,400 more orders. Airbus Group's management team is also making some structural changes to the business, divesting non-core businesses, and they're also returning capital to shareholders in the form of share buybacks, and recently they instituted a dividend that we expect to grow along with earnings in the coming years. Airbus Group's also cheap. Our fair value estimate's €70 in the company, but it's been trading in the low 50s.
Our Kevin McDevitt recently went out to Vanguard headquarters to see how the firm is finding its footing among continued asset growth.
Even as it has grown into a $3.5 trillion behemoth, Vanguard's core values and mission remain intact. Its ad cost structure has led to a firm-wide average expense ratio of just 18 basis points. The so-called Vanguard effect is leading to fee compression across the industry. Vanguard has stayed true to its principles even as it has evolved well beyond founder John Bogle's blueprint. Much of the firm's growth during the past 5 years has come via ETFs, which Bogle initially saw as speculative trading tools. The firm is also far more global than in the past, both in its operations and mindset. For example, Vanguard now is a 24-hour global trading operation, but the firm acknowledges that low cost won't be enough going forward. It's getting more difficult to move the needle. Furthermore, big rivals are competing aggressively with Vanguard on cost, so Vanguard is exploring ways to use its scale to create value in other ways. Personal advisory services is its most ambitious such initiative. Plus, with size comes scrutiny. Vanguard owns 5% or more of most companies in which it invests. Its size could also attract greater regulatory attention in the future. Overall, though, Vanguard continues to be a model of fiduciary prudence.
And be sure to catch Tim Strout's take on August jobs report.